Hello, welcome to JS Services Strategy Recap, where we go over a specific market state condition. Today we're going to go over a neutral positive shift when the R level is equal to the downside pivot, which we saw in the U.S. Treasury bonds. A neutral positive shift is a market that's been in a neutral zone and it had a positive shift. This is a dynamic trade state with the potential for action. So the market expectation, we had this positive signal. We're just shifting to the upper edge of the neutral zone and to see a rejection back into the more of a digestive trade. If the market's going to follow through on the positive signal, it will hold positive structure and just go. And if not, that will be the tell that we're going to be in a digestive trade. The structure is important for each market state, and the structure we're focused on in this example is having the R level equal to the downside pivot of the critical range. Because we're in a neutral positive shift market state and we have R level equal to the DP structure, that gives our sentiment bias a positive skew, and we're going to be looking for exhaustive signals, reversal signals at the upside pivot, and also fading momentum off the DPR level. If the market's going to break structure and transition, we'll see a breakout above the critical range, the upside pivot, and then a pullback into it that stabilizes and starts to build positive structure. Or we could see a failure from the DPR and a downside breakout, and the tell here will be if the market holds negative structure. If we look at the structure on a daily chart, here's our critical range, upside pivot at 163.30, and then the DPR level at 162.04. We had this positive signal, but we're still in this neutral trade, so we're anticipating resistance here, and this is our key support level. So if we're going to remain true to the expectation of the state, which is neutral, we would digest within this range. A failure here would signal a negative transition potentially. And a violation here, we wouldn't expect it to be so smooth, more of a kind of a stop and go working, maybe expanding this digestive range. Technically we can see we still have a good high here, some highs here and here. Could be more messy digestive action, whereas to the downside you could see some more of an accelerated transition. So we're always monitoring price action within market structure. So here we are at the regular session open around 7:30, 7:20 time zone, and we can see overnight that the market has been trading above the midpoint of the critical range, or the directional. You can access the tutorials by hitting these question marks, and we're going to take a look at the critical range, which is part of the price map. Critical range is a key price band. It identifies the neutral zone, area of indecision for the market, and the midpoint of that zone, not necessarily symmetrical midpoint, is the directional. It's important to understand the full structure of the critical range. So we have not only the directional midpoint, but we also have two interior levels, CR plus, critical range positive, critical range negative, and the CRX plus and CRX negative. So anytime you're in a digestive trade, the market will use these, lean on these metrics a little more, and it can give us some tells when the market's breaking structure. So our expectation in a neutral positive shift is that the market is going to press into the upside pivot. We could see the CRX plus come into play to contain it to the upside because of that positive shift, and so we're going to use that as a good metric on the upside. I'm going to add the minor price map levels onto it. So one thing we get out of the critical range is the price segment distance the market's trading in, and this would be a half segment move, and this would be a full segment move up to the upside pivot. So we're always looking for full segment moves, or 1 APMD, and then if we get into a trend move or a rejection from this upper lid, we could see a 2 APMD move down to the DP. That would be the full digestive range. As a rule of thumb, half APMD, full APMD, and then 2 APMDs for targets. And as we open up in the early start of the session, we get a play for the upside pivot. I'm going to throw in some variances and our alert distance. So this is our area of signal acceptance, the alert distance, and then this is our variance. So this is like our optimal area to fade momentum. We are looking for a reversal or an exhaustive signal. Bottom line, our expectations that the market's going to give us some type of reaction here. So I'm going to drop it back into a smaller time frame, and we're approaching this resistance level. Market's coming into our variance. It's setting up for more of a fade opportunity, and here we get a break in price structure. So we're watching price action within market structure. We're looking for excuses in this positive surge to end. It's a positive shift, so it's kind of a shift into the neutral zone, and we're pressing this resistance area, and they're rejecting in front of it. So we're not getting a good exhaustive reversal, but we did have a good fade reaction. At this point, we're breaking the positive momentum, and now here we're breaking market structure. So at this point, we have good clarity that we're in this optimal strategy theme. The market is transitioning, and it's looking like it wants to transition down to the R level. It's in a big neutral state. So we have some trade vision now. We have some pretty good clarity that we were in a neutral positive shift. That's the foundation. We were looking for an exhaustive turn. They didn't press through and give us an exhaustive signal, but they did fade in front of it. A lot of times that's more negative because you have a fade in front of this figure in a neutral zone. If they're pressing the top part of the neutral zone, where can they go? Well, they can go to the bottom part of the neutral zone. And so here at this point, they're breaking market structure. So not only are they breaking price structure, but they broke market structure. So at this moment, we have some really good clarity that this market's in a sideways trade. We're at least going to test this directional, but we have the potential that we can have and that would be a 1 APMD move, and this would be a 2 APMD move. And we have the market working negative structure here, so we're focusing on this negative structure, and we're going to work that until it tells us it's not true, and our expectations is that it can trend lower. Here we get a test of the directional where you can expect reactions. We could get a half APMD reaction. Again, now we're looking at this market climbing the staircase down. First it's climbing the ladder up of market structure. Now it's climbing the staircase down. And just keeping it real simple, having an expectation that we're in this strategy theme. How can we get on that theme? We know where it can go, we're anticipating to break down to the DPR, which would be a buying opportunity down here. As you're tracking price structure, if that's the opportunity, as the market stabilizes here, absolutely we could get a bounce back up to here. We could even get a bounce back up to here because we're in neutral. But when they start to fail here, and you're looking at this price structure, you've got a market metric here, you've got price structure here, and now you've got a situation where we make a new move low, and we're getting price structure at the directional. So they're giving us a sell opportunity against this structure. And what's our risk? We can risk above this metric, and we can also risk above these highs. What's our opportunity? A full APMD down to 162.09 area. Again, just keeping it real simple. The market is building this negative structure. That's our story. We're sticking to it. What's the vision? It's coming down to here. It's stair stepping down. Here's another negative signal. Even for shorter term opportunities, we've got market metrics here, we've got price structure here, just working this simply, anticipating to move into this zone. So the closer we get to it, the less opportunity there is. And here they just missed the top of that variance, and now they broke market structure to the upside. And we're ending the session. I want to take a step back here and point out a subtle tell the market gave us here. To set up this opportunity. So we see this, and this would be more difficult to pick up on, but these things do happen a lot, and I'll show you an example. Again, going back to our tutorials, a lot of good information in here. Into the strategy tab, there's specific entry strategies, specifically a fade, and the example I'm going to show you here is going to be for the buy side, but we'll have to just imagine this and flip it upside down for the sell side. This strategy happens because of a lot of people that follow intraday support and resistance, which is really porous. The market structure is really where the market makes decisions, and so when you have intraday support and resistance that matches up with market structure, that's when it works, and when it doesn't, that's when it doesn't work. And so that's why it can be pretty frustrating to try to guess. So why did this market stabilize here one day and not the next day? It's typically because it's not happening at a structure point. Big funds really don't care about a base building on a 5-minute chart. You know, their short-term outlook is 3 to 6 months, so their concern is the market going to transition today or not, and so they're focused on the structure points. And so what will happen is, you know, the market will come into an area and they'll start to stabilize in front of it. You know, you got the price map level, the inflection point, and they'll have these impulses into an area, and the market will start to, profiles will start to build up, and you'll start to see intraday support and resistance build up, and you start to see buyers, some accumulation. It's coming into some decent support or into some decent resistance, and then the market gives you kind of a bounce off that level, and then it pulls back and holds it, and so again back into, let's say, a point of control situation, and then you get a positive surge that confirms that this thing's going higher. And here's the tell. It breaks structure, breaks this structure, and said we're going higher, and then you have this sharp move against it, but that sharp move comes right into a market structure point. This is defined as the market structure point, and you'll get this sharp move into it. All the buyers here are getting stopped out here, and the market goes right to structure and then makes its move. We had this situation set up today in the bonds where the market is working higher. It's impulse move into an area, and then it starts to break this structure here. So we're breaking this price structure here. Then they give us a pullback, and you have all this digestive action. And then at this point, they're starting to tell you, oh, we're going to go lower. And then you fail here, and you're sucking some people into this sell. And then you get that violent move against it, and we're stopping everybody out, and everyone's scrambling. And if you don't have, if there's no price structure here, and you're not aware of this, what the structure of the market is, you're scrambling, you're buying right into this. But it comes right to the figure and holds, and you get that rejection. But the tell was here. And I'll put the minors on here. The market pushed into it, held here. It should have started to scale higher and climb the ladder higher. It didn't, and it rejected. Then it makes a lower move lows here, and now it's at this moment here in this bar here, you're failing here. It's looking like it really wants to go. But the bigger market structure point is here at 164.11. That defines the upper lid of the neutral positive shift, and we get that surge into it, and then we get the big rejection, 2 full APMDs down to the DPR. And so this was tough to pick up on. A lot of times it's a little more obvious, but it's always something to look for. And even if you're not picking up on it here, you're coming in here, you're getting a rejection, when do you get your awareness that you're in this theme and you're heading here? How much of this can you really pick up on? And you'll find yourself getting clarity sooner and sooner. But definitely as you're at this level, you can, and you're aware of these situations happen. Oh, they gave us a spike. Oh, they rejected right from the figure. Oh, we're breaking price structure again here. What's my trade vision if they do that? Well, I'd anticipate them to transition through the directional and make a play for the DPR. They might not do it. They could stabilize here and just go. So they stabilize here, they bounce, but they can't hold. They maintain this negative price structure, and then you get a failure here. And they're working it. And then here, okay, we start to get some real clarity at this point, and they give us multiple times to sell it. Here's a half APMD. Here's almost a full APMD. But when do you get your clarity? But that's the key with focusing on with the state structure, strategy themes. That's the macro foundation, monitoring price action within market structure in the context of the market state. For more information, come to jsservices.trade. And if you're not a subscriber already, click on here to request a demo or contact us at info@jsservices.com. I look forward to working with you.